Hey, what's going on, guys? I'm just going to be breaking down the charts and what I saw this week versus what actually happened. I wasn't even actually too wrong on the overall week. I was more and less just a little bit hesitant to trade. One, because I wasn't feeling well. As you guys know, I've been sick since last week. But two, it was just because I cut my first initial my first initial position that I had for the long up here for the June contracts on a breach into the gap, right? We had this bear gap setting from 476 on the NASDAQ, and it started on the top of the April 9th squeeze candle, right? And you pull that over. You take a look at this zone right here, and it's a very, very easy zone to see. I mean, it's a target of just about 40 points higher on the QQQ, right? When we go over to the S&P, and what I was looking for was just a little bit of distribution happening within the lower portion of the gap, right? This is the entirety of the gap. I was looking at micro distribution happening kind of in the lower portion of that gap just to resell things, shake out some longs, get some buyer stop rates collected for full fuel on a push to obviously fill the entirety of the gap, right? And we actually got that. That's why I was telling you guys I'm looking at a GDP buy climax where we're likely going to obviously sell. And then what I said was we're going to sell into one more re-long opportunity. If you guys are paying attention to anything I said it would be smaller time frame distribution into just another long opportunity. But unfortunately for this week, it was more and less of a lockout rally, which I definitely should have expected. Another thing that I would like to mention, guys, is that the daily candle close obviously means a lot more than just your smaller time frame gap downs. So whenever you're seeing a 15-minute gap down like this, yes, it's kind of hard to catch, but at the same time, it's okay to be able to take this thing once levels are reclaimed for a swing, right? And then obviously this has just got its full out continuation into the 565 target, which is where I would have sold off on, the last final long that I was looking for to meet 565. As you guys know, I've been targeting 565 for probably about 3 weeks now, right? So this is all, it all makes sense. It's all okay, but at the same time, it was really tough. And then you feel as if you're chasing, and that's whenever I just was not really dialed in, not really too focused. So it is what it is over here for the GDP long. This is just about the only thing that I really missed. And as you guys can see, as we also talked about, this was all a path of least resistance that I talked about in a previous video, right? So it's all a progress gap. It's a big time resistance up here from 544 into 545, 546-ish, and we printed a really nice hammer higher low that took out the Monday, April 28th lows, right? So it took out the current week lows actually, leading into the GDP report. It gapped down and found continuation for the first 15 minutes of the day, and then it held all of these areas of former resistance into a support. Same with over here on the S&P, as you guys can see, right around here, off of the Monday lows, an undercut of those, right? And then we also had a back test of all of this resistance throughout this range, right? It all makes sense. There's nothing really random about this. It's just the fact of how the retracement looked a little bit shallow from the higher time frames, and I actually just got a little bit too picky towards looking for just a little bit lower. If you guys go to the S&P, I was essentially looking for about 1% lower, 1.5% lower, possibly even like 540, the 540 psych. Uh, is there even really a reason to wait for that and to just wait and see what goes on around that area? No, I mean, it's $1 lower from where we actually had. It's just it gave off a very weird, sketchy vibe, and then all it really did was squeeze everybody out, fill the gap. Had the really nice end of month candle close, which is obviously a very bullish thing. Um, this is also the beginning of the end of this is the beginning of May, as we know. So, whenever you're in contact, whenever you got context of a chart that looks like this, kind of in combination with like the end of month candle close, um, this is really, really, really good opportunity here to obviously reach the upside targets into 565 in a very quick way. So that's the only trade, if you want me to be honest, it's the only trade that I missed this week that I thought was really good, right? I also missed Google, but I don't really care because I wanted to have a lower amount of trades this week. Wasn't feeling well. I said I'm probably not going to be trading. I ended up trying to trade a short. Only took about two full-size trades. Lost on one, and I'm still holding the other. Lost on the S&P after going green on the 565 short, which is unfortunate, but it is what it is. Lost on that, and then I still own some Nvidia puts that I'm sitting in right here. Um, so we go back over to the missed opportunities and whatnot. I mean, the only thing that I found as a really attractive long side trade for the market here was basically Google, and it was basically yet again not enough really of a pullback for me to have a super reliable risk level. And then once I saw this hammer candle in the close above the previous day low, if we guys go into like your 15-minute, it was basically just kind of basing underneath that with a weak orb most of the day, and then it kind of carried through on the close that was really strong here for Wednesday. Obviously, like I said, that's the end of April. It's the end of the month candle closure. And I knew about this. I just wasn't really looking at the market at the time, and everything about the Google chart until that close didn't really look like anything too attractive to me just yet. It just wasn't anything that looked like it was worth my money. And it's unfortunate because these are all the setups that I was really watching throughout the week. And yes, it does have to do with me not feeling my greatest and laying around in bed and not being prepared, but I probably wouldn't have traded this anyway. Price action was not that great this week, despite, obviously the lockout rally that we are obviously seeing here. Um, the only thing that I also really messed up on, and I'm okay taking the losses on these this week. I actually had a red week, but I'm okay taking these losses. I had one big short right over here on the 565 gap where I started to scale into this thing when we started to get those sketchy looks on this price action right here, really low volume, right? Really weak looking trend to the upside. And then we had a really weak looking trend to the downside. So, I wasn't really willing to add on any sort of lower high until we got this 15-minute structure that looked like it was really trying to put in a lower high, sub 564.52, which is the gap fill. This is also leading into the reports, right? So I was pretty bearish, and I decided I wanted to swing this because I was bearish on Apple. For this little imbalance down here in the green box, it was a gap sweep into the report. It's actually a distributive looking chart when you're looking at this from like a higher time frame perspective here. Um, Still not a lot of volume in any of these earnings, but yeah, they were reporting, and then we also had Amazon, which was basically in the middle of nowhere. I mean, this is kind of just consolidating off of a previous consolidation, trying to digest off of a previous very big time level that needs to be absorbed and fully controlled by a side before we find control of a side in the chart, right? Some big time levels, in certain areas on Amazon, right? But there wasn't anything too notable about this one either. And I was leaning a little bit bearish for Apple and Amazon combined, and we had a really nice markdown within Amazon. Obviously, that one reversed. Apple did not reverse. It actually kind of just kept dying throughout the later hours of the day. Um, However, we had some sort of random headline about trade talks that came through. And then we go over to NQ, and we had a really nice position that was kind of building out here. And I feel like this might have been, manipulative in a way that is trying to squeeze out last shorts before we get our parabolic climactic top, and everyone kind of capitulates out of the short side trade, and you get a lot more piling into FOMO on the long side trade, and it ends up being a absolute shit show, and you finally pull back. But yeah, I mean, this was a random headline that hit down here on NQ off of 19757, and it was basically in the midst of nowhere, and it started to just kind of look like it was putting in a higher low in the hourly, which really does suck because I was looking at everything going on with like this tariff high. We swept that on the Qs leading into the day. We found a lower high into the close and a really weak looking close. The earnings reports were bad. Everything looked really promising actually on NQ, and basically it just ended up being an absolute nothing burger reversal that was on zero volume. And then NFP was kind of the icing on the cake here for an absolute squeeze out, lockout rally. And I feel like NFP definitely squeezed a lot of shorts. And that's a good thing whenever you're looking at the short side because you don't really want a saturated side to really participate with. And you want, a lot of people kind of capitulating out of a trade before you're the one that's entering that trade. And then becoming uh, you end up becoming your trade can be something where you have a lot of euphoria from the counterparty up towards a high, which I think we're going to start experiencing here soon. We do have FOMC next week, but yeah, I mean, all of this looked really promising. There's obviously a slight divergence in regards to like the tariff high on ES, which is probably going to be my next target for a very large, heavy size trade. I had a red week. I kind of need to reset. I kind of need to look at these things and really reevaluate and break down charts based off of what is being shown in front of me rather than trying to be a little bit more on the speculative side, which I did understand I was kind of doing. But I can't really say that in hindsight because, I mean, this did look pretty promising with how I broke everything down here leading into that trading day. We go over to some of these other things in the market, some of these other mega caps in the market. There really wasn't anything that I found to be really attractive. This, in my opinion, has been more of a scalper's type of market rather than it has been building out really high conviction swing trades. I did have a win this week. It wasn't as heavy because it was through GDP and I played more volatility and other type of products than I did options just because I didn't want to get IV crushed or deal with not being, the implied move not being met. Really nice buy climax right here into the breach of the gap, the first initial breach into the gap. There's your buy climax. Data is on Wednesday. I figured the data would be a shakeout. Like I said, was looking for the shakeout to extend just a little bit lower, right? And it ended up, failing to do so, and it reclaimed the levels, and then it just had a complete total lockout rally. Um, I didn't react to this on this day. I don't know if it was, if it really had to deal with my sickness or whatnot, but really fantastic opportunity here, and this is about the only thing that I have been looking at saying, wow, I can't believe I didn't take advantage of that. Just because it's testing the bottom of the gap, the former resistance that we talked about as being a path of least resistance. You got to remember, guys, we've been bullish the whole entire time on this chart, right? So if there's no other sign to obviously, shift what were previously seeing, and what I mean by being bullish the whole time, I mean we've been bullish for the majority of this range down here, is what I'm saying, right? So whenever you're up here and you're, failing to see the signs on each daily candle closure of, things moving lower and you're getting these breakaway gaps to the upside, you got to think that something like this wick down here is trapping a lot of the counterparty on the short side, thinking that this is all, the time to look for the lower high, to look for the gap breach, to look for the failure, and then, even smart money will enter down here. But they're overpowered, and then they hold the level, and then they, build out clean structure above, and it just leads to a really, really, really slow squeeze to the upside that doesn't even have any stability other than shorts being underwater, and that just continuously becomes a domino effect because people are trying to short this, people are trying to speculate as to where the lower high would be or where the pullback would be, and it just keeps, it's just a really, 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 really big snowball effect that ends up being a really nice lockout rally that looks to be weak, but it's not, right? So with that being said, guys, that would be kind of like my recap. I'm still short Nvidia, and I still think a lot of the equities in the equity market can pull back. They are bidding 109 with about a billion in notional value on the dark pool. There could even be a little bit more. Um, really, really ugly looks of smaller time frame distribution, in my opinion. Here, if you guys go to the regular trading hours, had a really nice gap up and then a lot of consolidation here, and we're just hovering off of this resistance. Could it sweep that and get a little bit more of a pierce of the resistance, put in like a UTAD and then fall? It could technically. I'm going to leave my trade up to that, and we'll see kind of what happens into the new week. We do have a lot of opportunities next week, and there's going to be, a lot of opportunities for us to be able to capitalize on. It's just going to take a lot of patience, and there's really not much more to do in the market right now rather than just wait. Um, we do need the reversion, and if we could get the reversion, that would be fantastic. I would love to see how the reversion looks once we finally do get it, because it definitely is coming. Things can't just keep on, consistently moving to the upside like this. So, maybe we get one more headline. That headline gets everyone bulled up. Everyone thinks, tariff wars and geopolitical, the fear kind of eases off while yields are still kind of on the rise. And then every, big money, all they do is they redistribute into pops on maybe like some easing type of tensions between countries and trade war and whatnot. So I don't know. We'll see. I mean, it's a headline-driven market. It's a news-driven market right now. Everything can reverse or see the continuation based off of one word said overnight, all the way over in China, right? So it's a very difficult market. The best you could do right now is trade a little bit less and look for very high conviction setups. Something that I actually failed to do this week, but we all make mistakes. It is what it is, and I'll be back next week.